Good evening, everybody. How we doing? All right, welcome. Okay, listen. I know we're having a lot of technical difficulties in the last couple of weeks, and hopefully this will start putting an end to it. We're going to do a Zoom recording tonight. I'm going to skip all this other shit that I do in the beginning, and we'll get back to it next week. We're going to get right to the charts. I'm going to pick up exactly where I left off. I'll probably do about a 30-minute recording. It'll just be on charts, talk about pop quizzes and stuff, and the charts I've been trying to get through. So I'm already like kind of jacked up since I already did this intro with you guys. So I'm skipping all that and let's get right to the charts. So what I'm going to do is I'm not going to pause. I'm just going to, tell you do the quiz. Instead of taking a minute, what I want you to do is just pause the video yourself, walk through the chart, exercise, and then turn it back on. So I don't have to sit here for a minute while you guys are marking up the charts. All right. So let me get back to where we're at. So what I want to do is I want you to start trying to visualize. The whole point I've been trying to get across for the last couple of weeks is I want you to visualize what's going on in the book while the candles are painting. And then I want you to reverse your thinking and imagine where the book would print the levels and form the candles. So what happens is candles form from order flow coming into the book, right? So as a candle forms, it opens, right? We got it. Let's just say it's a red candle, right? You have the open, price prints up to the high swing. So it means when the candle opens here, it initially starts like that, right? And then in order to get this wick to show up, the dealers flood sell orders and they force it down. And then you get a standalone wick. And then it returns back to the opening price and turns inside out. So in order for all these things to happen, there has to be met with order flow going into each sell. Remember when we cut the candle in half? I showed you this, guys, before, how the spread works. You new guys probably know what I'm talking about, but the candle's cut like this. And there's bids and offers or buys and sells in each one of these little tiny cells, even all the way up on the wicks. You still have that. But what happens is as the candle gets to the higher or the lower levels and the higher levels, the order flow tapers. And you have in the few last cells of it, you have zero orders, zero buys, or zero sells on one side. And that's created trap traders. So you'll have like some ridiculous number over here, like 350 orders will go off, and then zero, meaning that somebody executed, but nobody accepted, and they got stuck. So now you have, it's called trap trader on the tapers of the candles where you'll see this most common, right? But everyone knows that traders execute all up and down candles, so they get stuck. Okay, so understanding what the prints look like, understanding that there's order flow in the book, like there would be a level here and a thick level here to create these turn bars, right? Where the bar either rejects or creates a turn in the market. So you have an order block sitting here and an order block sitting here, right? And let's just say, for argument's sake, they're red and orange. Price comes in, hits this order flow, rejects, takes another stab at it, and rejects it again. So this microstructure that helps paint these candles can be zoomed down to a 1 minute, 5 minute chart, and you can see the micro M's, usually coming off of a higher pattern like this. So where you would have the same type of situation, you would have levels stretched all the way out in the book. So I want you to start visualizing this and understanding that these microstructures are the same thing as grabbing a main anchor. Once you understand how to analyze the charts, where you go, let's say you do your daily analysis, you look at the 1 hour, 4 hour, you get a direction. And if you're intraday trading, the 1 hour is enough. 1 hour, 15.5, 1 hour, 15.1. Those are good enough for you to get your intraday executions, especially if you're drilling down to get micro entries or secondary minor entries off of an anchor. All right, I hope this is making sense to you guys. But the idea is to execute on a limit order in this range of the chart. And if you're not ready for the limit order, then what you want to do is execute a nameable pattern in this area. So you would have a rejection here, price would move down, right? You would get a turn bar, an order block right here, turns it back, and you already know you have these orders here. Why? Because you got this turn bar here to make the micro M. So if the bars are turning, there's orders in the book. And if they come back to retest it, you would refine this off of here, draw a box, put your sell limit order as close to the edge as possible, and then your stop would rest above here naturally. If you're using a 10 pip stop, it's going to fall 10 lines in the book above, right? And you'll be on the 10th line. So if there's any thickness in the book, you got the turn bar perfectly, your stop is never, and I mean never, threatened. You're either right or you're stopped, and that's what you want. It sounds like, oh, I don't want to get stopped out. Putting your stop 30 or 40 pips away is old thinking. I used to do that because I couldn't see the orders in the book and didn't understand it at these levels. So now that we have the tools available to us as technology has advanced, I mean, it used to be, excuse me, it used to be thousands of dollars to get level 2 feed into your house. And now it's available for $40 a month, which is absolutely insane. All right. So understanding that, we were looking at this chart before the interruptions occurred and the lag. Okay, so you see what happened. You had orders in the book. You had some absorption. The dealer sucked these orders in and rejected off of the top. So they grabbed them and dropped. Now these people are in trouble, right? Price starts coming back up. People get excited thinking they're getting out, and they shift it again. So if you have a long side bias in your brain, you're only seeing long ideas. So in your mind, you might think this shit looks like this, and you want to be long. When in fact, when they cut this low, when the dealer takes out this swing, you just need to stop yourself. You're wrong. Will it come back? Yeah, but it will never come back to this level. And if you executed right here, you're actually your order sitting here, probably 1 or 2, depending on the spread and if the dealer slipped you. If it's a 2 pip spread, 1.8, you're in this second chunk of orders. You're up here, right? Then all of a sudden, what happens? I'm 2 away, 3 away. I'm right there. Bam. Sorry. This is trap trader. This area became blocked for sell side, and you are a trap trader if you're long here. Now, flip your mentality, flip your thinking, and realize that this is a downside bias. How do you know when does it turn downside? When the dealer closes below these levels and retests back and fails to get above here, you are now downside bias. So the logical thing to do is after he closes below here is to look for a secondary micro M structure and try to get yourself short. You could do that from drawing the levels out into the future, boxing it in on the wicks, or refining the entry off of the first rejection. So I don't know where it's going to reject, right? I don't know. It could go here, it could go here, it could go down here. I don't know. There's some type of range. But rather than guessing, saying, oh, this looks like it flipped right here, maybe here, right? You'll get a rough idea. But a refined entry gives you the exact spot on the chart where you could expect it to reject. Okay? So this is 1, 2, this is 3 pips, a 3 pip range, and you can just go right in front of that box, and you can use a 5 pip stop up here. So 3, 4, 5, sorry, stop goes there. And you notice that you're going to be above the thickness in the book. Price comes right into it with a big, huge execution bubble, and then bam, you're into profit immediately. And then what happens? It hits VWAP, right? So now you need to get below this level in order for this trade to get validated to stay. So if this comes down here and turns and comes back, you might not have the right level yet. So then you could actually adjust your stop into +1 and take the scratch and then look for another spot. But price does come down here and close below. Now what happens? You get a micro V structure, right, which gives you a possible secondary refined entry. So either you can use this to manage your stop or take another execution. So you basically could scalp 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 ticks, pull back, and then do it again over here. So this would give you +10, and this would give you +10, or the whole ride would give you about a 20, 25 pip take profit. So again, you get the close below, you get the little micro V structure, and you're looking for your 1, 2. I noticed that I talked about this is that when there's spacing in between here, enough to fit an index finger, and we made a joke about what that is, right? Enough to fit your finger in there. To go short and going long, it would be the opposite. When you get this roll, those are usually the best places to execute. And you always want to have, there's major structure, 200 EMA, blueberry, 50 EMA, you want to execute 1 tick or 2 ticks in front of that area. Okay, but in Forex, you got to be a little more careful. They whip the spread. So you might get wicked in here, maybe to hit that liquidity or that liquidity. Okay, does that make sense? And then again, how do you confirm the trade's still valid? When this closes below that, look for a little pullback. So, Steve, I don't have the book. How do I see this crap? Well, this is how you see this crap. You look on these areas where the swing points are. This would be represented as a turn bar, as a candle, right? So for argument's sake, let's say, right, the wick was here, price dropped down, there's some sideways movement here. This would be the body, and it would go down like this and back up, and you would have a wick right here on the turn. And this bar, nothing would print either, it would either print equal or higher on the next couple of bars, right? You could even make the argument this might be a doji right here, and then this bar would come out and go long to create that V pattern, that opening. And that's what you want. And the sharper the V and the more space in between here like this, that gives you a really solid entry point. And then you can start even counting levels in here. You might have 1, 2, and then pull back even and then push through. These are the things you have to start looking for. But I don't want you to buy the book. The book is going to distract the crap out of you. What I want you to do is I want you to try to understand how the candles are being painted, and it will help you understand how to make these entries, right? Where does the book flip? The book flips right here, right? This would be the level. You would box this in, and that would be the spot where the book flips. Okay, but I don't get my secondary pullback into here. That's a no trade. Okay, where does the book flip? The book flips here, right? So terrible drawing, forgive me. So now I got a break below, and I'm looking for a secondary pullback. Where does the book flip? The book flips here. I'm looking for a break below, secondary pullback, right? Doesn't come all the way back. I'm looking for a break below and a secondary pullback. I get it here. I'm looking for a break below, secondary pullback. I don't get it. But now I'm in sideways movement, consolidation, right? One could make the argument that there's 3 pushes in here into sideways movement. Notice how when price is moving in your favor, right, the orders are pulled away and they're thick on the backside of the book, pushing it down. And you always get orders on both sides in sideways print. Why, right? Price is going up, orders are blocking here. Price is going down, orders are blocking here. Why? They're trying to get absorption and induce longs, right? Every little pullback makes somebody go long. So if somebody had the argument in their head that this was a W print, right? And they keep pushing and pushing and pushing, and they're long from here, or they're long from in the wrong spot, they're drifting away from them and making things hard on them. Okay, so you're looking at where do the levels break? How does the candle behave when it breaks the level, right? This is your initial block of orders, right? You can make the argument this is Asia. This would be a straightaway trade. So what happens? They hit low. People think, oh, people do the reverse of everything they see, and that's one of the flaws. And I guess the way I taught people, they try to fade everything. I call it perma-fade, and it's absolutely wrong. You're looking for the edge. You're looking for a confirmed M or W, high swing of the day, low swing of the day, leaning on stuff. Blue tracer, yesterday's high-low, right? That's what that is. An opening price. If it's going to be an AR trade, you're looking to lean on one of those levels in the Asian range. Does that make sense? It's not always, oh, do the opposite of what the dealers are doing, right? And if you want to take it a step further, use the timing element. The timing element is right at 1 o'clock, right? 4 o'clock on the session change, and then 9:30 in the US. You would fade those areas looking for the most price action, right? That's when the new dealer comes on, they run the stops. Everybody knows this, right? People are all over the internet taking it as their own. You think I don't know that people are imitating me and stealing my shit? Of course I do. But there's little I can do about it. Facebook, Instagram, they don't give a shit. But I don't want to get off on a rant about this stuff. So what I want you to understand is this. If you notice the delta in this book, right? This is the net delta of orders, okay? Net delta is accumulation of sell and buy orders and which way the book is leaning. The book is red, meaning the book is sell side, right? So down, up. Okay, the delta didn't turn green. Down, expecting a red delta. Up, the delta's still red. Down, chop, right? 1, 2, 3. Accumulation to the downside, offloading, the delta turns back green. Sell, 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 buy it back. Dealer. Okay, that's how they get out of their positions. That's how they offload. Notice the thickness in the book and how you have chop. That's where I was trying to explain to you that they don't make any new low, significant lows or highs, right? They go in, they make a swing high, swing low, and they trade in that range. That always happens towards the end of the day or change of the session. Look what time it is on the bottom of the chart. See the time ribbon? Okay, 6:30 in the morning. So what happens? They came out of the gate, right? Beginning of the session, they busted everybody's chops, and now they're squaring their positions to turn it over to the New York session. Okay, so what's in there? What are the elements? Got a 50 EMA as a balance line, above water long with confirmation, below the water short with confirmation. If price is going down, the delta's net until the end of the run. Do you need a book to tell you that? No, because it's the same shit. You sell, and the dealer offloads at the end of the run. Literally going into level 3, coming into the morning hours, right? After a nice overnight run, he goes sideways, starts dumping his position. So if you understand, right, what's going on here? Accumulation, net red, net red, net red, net red, start dumping, turn green. Right? This is the peak of the amount of accumulation in sell side book that he has. And it happens to be the deepest run spike. And then once he gets his net, he starts pulling back and offloading, 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 get rid of this shit. Session's over. Dump it. Okay, so what does that mean? You catch a trade, if you're a swing trader, you want to hold it for a few hours, a few days, whatever it is, you're going to have periods of consolidation and pullbacks, which are going to hurt your position. If you're a shorter term trader, realize because you caught the high swing of the day, you're not going to get every stinking pip out of it, and take measured moves based on scientific study and using the Fibonacci extension. That's the only thing I use it for, Muhammad, right? You can project this move to this move would equal this leg into the lows. So if you're short here, you're not going to get a million pips. You're going to get whatever this one. And I usually take 75% of that. Okay. So if this was a 100 pip move, I'm looking for 75 pips on that. Make sense? Okay. I want you to notice the delta stays red until level 3 consolidation. Price below the VWAP is the 50 EMA, right? So you can get a bounce trade on that. I want you to notice that there's several V patterns on the way down to exploit, and the turn bars are always orange or red. To create the turn bars, they use heavy, heavy stuff to get the turn. Let me erase this crap. Right? In order to create the turn, they have heavy, heavy stuff in the book. Heavy orders. All right. Hope this stuff's making sense. Okay. Now, I want you to do the opposite. I want you to draw the lines on the chart. I want you to visualize what it looks like. Okay, so you should have paused and came back. All right, we already know that this blue line has thickness in the book. Order flow, right? All this stuff, in order for this to hold, there's lines in the book right on here and right on here. We already know that. Right, so the book looks, I can't draw. The book looks something like this, right? Actually, it would be 2 levels, cut it. Okay, so what happens? Price goes in, they offload a little bit, and retailers try to go short the bottom of the bar. It pushes them back up. And notice how it doesn't take the same level because they got trap traders here, right? They got the most amount of trap traders at the low swing, pushes them back up, and they fail to get below there again. They don't let them out. Then they shift the zone and consolidate. This is a small consolidation on the chart, but what's happening is, right, we know that these are very little to no orders to move these candles, and I'll show you that in the book in a minute. They pull back, they hit it again, but they miss. So that's the old mentality. Oh, it's going down. I'm gonna get out. I'm gonna get out. Nope, sorry about your luck. Now you're sitting here and they don't move price. And when you're in this going the wrong way, it sucks. They're sitting here consolidating, holding the level, making you think you got a chance at heading down and getting yourself out of this. This is where an aggregate entry model would help you. If you got in here short and you re-entered here, you would get some type of near break even or scratch, half the distance. But it's a lot better to be trading the right directional bias and move. Always, obviously. Okay. We talked about this last week, but I want you to go over it. There's two entries here. Find them for me. There's one long and one short. Which one is better and why? All right. You should have marked that up and came back. You have a high swing here. Price breaks below and retests the 200 EMA. Now, if I'm looking for refined entry, right, I'm below the apex nadir stuff. I like this setup. So I want to come over here. I'm going to get this hook and I'm going to refine my entry. So here's how I'm going to do that. I'm going to get this flat print right here in this candle, and I'm going to stretch it out like this. And I like the top of this candle right here. That's going to be my box, how I would draw it. Now, here's the question, always. If there's a significant moving average in the picture, which this is the 200, absolutely is significant, you can expect a rejection here, even a wick through this. So how do you account for that? Well, you want to front run the average. Remember I showed you how the bubbles pop in the book, how they get the turn right there? And this is the example. They didn't quite pin through it or hit it, but you want to make sure you include it in your estimation of where you're going to be. So your order, your limit order should be right here, and your stop would be 10 ticks above, which might put you right above the high of the day in this example. So you're going to refine your entry like this, right, roughly, but you know there's a possibility it's going to go to the EMA. So in this instance, you can go back of the box or top of the box and anticipate a spike through or trap through to grab people that are trading moving averages, right? Why? Think about this for a minute. There's some people that saw this and went long here, right? So their stop's going to be somewhere around here. So the dealers are going to make sure they grab that. And if people waited for this close, let's say they closed above and got in here, maybe their stop is right there, puts them right there to grab those stops. So you want to sell people's long stops, right? You want to sell where they stopped. And that fuels you right out of there. That's where that heavy rejection comes from. They go in there, one more test, right? There's orange in the book. It's built up. They grab the stops right off the EMA, and then bam, 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 they shift away, got them. How do you know it's going to continue? They took out this low swing and they V'd it back. So you could take, sorry, wrong device, looking for the pen. You could take this wick, right? I don't like it when they're this close together, but it's a good trade right there. Small like that, right here, front of the box, stop right here. And that you get that clean move right out of there. But what's going on is you're coming out of Asia, trading into the vector into the low. Now you're getting your W print. Okay, is this a valid W yet? I don't know. I know when they get a rejection here that they got trap traders at the lower level. So looking at this hammer, right in here somewhere, that's your zone. And lo and behold, they test it and hammer it, and then they come out of there. I still don't like it here because they could still turn and make another pass at it. So if you took this trade long, you got to be right below the low. And then you say, well, man, there's the blue tracer. I need to be below that maybe. And you start aggravating yourself with position, and you're not getting a good tight pull. To me, the better entry is to use the apex, right? This is the apex. We know that the apex is the beginning of a huge move because this becomes the permanent anchor for the day. And you're going to take the tops of these wicks right here, this little body right here, this little piece right here, this little shelf, and you're going to box this out into the future. You're going to absolutely take the high swing and you're going to go like that. Now, you're looking for an entry. You're looking for a micro W off of a W. And there it is, lo and behold. In this instance, it bounces off the EMA and pulls back on you, but then it gives you a clean run. So you would take an anchor, low of the day. Look at the timings on this. See it? 4 o'clock's the session. 2:30. Coming out of London close, 1 o'clock, 1:30, right? 2. I'm sorry, coming out of Asia. That's your low swing. Perfectly, they open, 4 o'clock, they run the stops, and they reverse it. All right, excuse me. They run the stops, you get a pin rejection, and they break above. Now, they decisively close above here, clean, and then they come back. So you already know your area is going to be around here. And there's your 1-2 secondary entry, micro W. You can put a stop literally right there. And that is a safe bet because you're leaning on all this thickness in the book, right? You know this is striped out to the max. All right, block zone. I talked about these block zones, right, 13 years before the book was even visible to me. And I'm going to show it to you plain as day what it looks like. This is such a large amount of order flow or block volume that this area is still the safest place to execute a trade, to be long or short. And if you have that, you have the order block low or order block high of the day. I cannot guarantee that the MRW formation is going to hold or the micro one's going to hold. But I can confirm the dealer by his block the rejection off the apex nadir. And this is why it's a great London location. When he blocks that apex nadir, it's gold, man. So here, this is what this looks like. Okay, I want you to notice the book is black. There's the vector candle into the low. And I want you to notice the color of the book. This is done on very little liquidity. Black, 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 black. They turn it back and they hit. Then they start putting thickness into the book, right? Retail activity, dealer starts blocking. Dealer starts blocking, dealer insurance. That big red line, orange line on the bottom, guaranteed no one's getting below that low today. Okay? The dealer forms the apex, turn bar, red, orange. He pulls back, failure swing. He does not take out the sell side of the book here on these trap traders. He comes damn near, right? Near miss, whatever you want to call it. But he doesn't cave. He gets pulled back up. Now, where are we going to get in? We're going to refine the entry, right? These boxes draw themselves, man. Look at this pin, right? Look at this pin rejection right here, orange. Look at this top swing right here. Okay, that's line 1. Pull it out. This could be, this low swing right here could be line 2. Move it out. This one here could be a tracer inside the box. I'd box this whole thing in like that. And I'm looking for 1, 2, maybe run the stops. Depending on what chart you're looking at, you might get this as 1 and 2 over here. This low swing here, and then a retest into there. And then lo and behold, you get a sweet move out of there. Hook back, hook back, hook back, boom. Then it pulls back, level 2 consolidation, expect higher price. But if you're executing in the middle of these boxes or front of these boxes, stop is here, you're done right there. It's over. See it? All right, plain as day, man. The idea has always been this. You get this vector into the low, you get a W formation, right? We know that this is done on less order flow. It's darkness in the book. It turns black. Then they put the order flow back in and they start creating offloading, right? Remember, they throw all the orders in here. And then your idea is to grab this and refine the entry so that in the future, you'll get this. Right? It's perfect. And you know that they have trap traders down on the bottom. So here, different way to look at it. You don't get anything here. This would be the box. It doesn't even bother coming back. It takes off, right? Maybe you can make the argument if you zoomed in on a lower time frame, you'd execute there, but not likely. So then what happens? You're looking for the next area where the book created a turn. Okay. When they go above here and hook it and close above, now you know that they took the level in the book and you're looking for a pullback somewhere. And man, they hold that level for you. They wait. They say, hey, hurry up, get in here, will you? You can execute in these pins. You start seeing these rejections, you need to get in. And they shift out of there, pull back, right? This is another entry off the 50 EMA. See it? This is not confirmed long until you get above here. So this is just consolidation right now. But after this move, and this move, you got mid-level consolidation. The dealers are trading sideways, offloading their stuff, confirming what they're going to do next. But we're using, right, the basic stuff. We have a W low anchor, right? We can make the argument that you got 3, 2, 1. They started to form out their W and they didn't get what they needed, so they ran it again. They hit the stops. They broke below, came back above. And if you're trading down on a micro level, you could have almost got that little hook right there. And to be fair with you, I wouldn't have got that. I'm waiting for a move above here. This is a good trade. You can take a risk with 5 or 7 pips to try to squeeze that out. But the stop really needs to go below the low swing because you don't have a clear defined break yet. Because this really didn't break above anything except that little section right there. So using the theory, you want to get above like this railroad track or this one. Because I would use this piece, and this piece to formulate an idea of where they're going to retest. And they did not. All right, so the next thing I want to do is look to the left, and I want to try to figure out top of Asia. I want to stretch it out into the future and have an idea where they might do something. When they break above here, then I want to refine the entry off of this last swing. Would be those railroad tracks. And damn sure enough, they test the crap out of it, but they can't get into it. And then they come out of there clean, and then they don't revisit the level again. You could put your stop right there, go right there and go to sleep. Get up 5-6 hours later, and there you are. Exactly what you were looking for. This would be a really good target right here. Why? Because that's a blue tracer, and there's thickness in the book around there. Could you reverse this? Yeah. When does this become a reversible at the end of the day? Right? Look at the time. Starting to get late into the session, right? We know late into the overnight, everything's cleaning up, getting into London tea time, all that stuff, right? What happens? Shoulder, head, shoulder. Where do I take this? I don't take it here. I don't take it here. I take it when this piece closes below this flat print. See the flat print in there? They can't get below it. Then all of a sudden they sweep it, they get below it. Now where are they going to come back to? I want to refine that area. How do I refine that area? Okay, I got my close below. I'm looking for something to lean on, right? I got some pins right there, maybe. Stretch it out into the future. I got the bodies right here. It's very tight. It's right on the EMA. So this would be my 1, 2. And if I don't get it, I could wait for it to close there and then take that into the end of the day. Right? You got railroad tracks into the same level that we anticipated, right? So what's here? You got blue tracer. They closed below decisively, retested, didn't get above this. In order for this to be a long, they got to get back above here. They do not. They create a failure swing. Railroad track closed right on the blue tracer. Drop right out of there. Then here's the next flip. They flip it again. Here's the next flip. Right? Right here. They close below, flip it again. Down here, and then the end of the day. If you start understanding these little tiny micro nuances, then you put it together with big picture. What's big picture? 5200 crossover, W anchor formation, right? They just hit it one more time. They break above the apex. They go all the way into the highs. You're looking for entries here and here, retesting the 50 EMA. You have any room to run left? Yes. You want to make sure that you have room to run. The distance from here to here is significant to you. Can you carve out your 30 pips, 40 pips, whatever you're going for? This absolutely has to be the target, but I'd hate for you to go long right there. You don't go long until it does this here. Then you take a stab at it long. But the problem is, look at your ADR run. Depending on how many pips this was, I don't remember. If there's enough room for you to grab something in there, you want to grab right on the line, right? Either one of these. But you're back to that refining, right? Here's your W. You get above, tap it back. This would be your W. Maybe you get in here. The very low, you want to get limit orders here. You're still safe. And then they give you some number, and that's at least a scratch or better. But when they hit it again and they close decisively through it, now you're looking for sell side. Don't get fooled by the tracer, right? You could short the tracer, but they might get you, and you still would survive that. But you want to look at what's going on here, where the orders are, right? This is your block of orders because they created turn bars here, and they created a turn bar here. So what happens? You get spiked right into that. They eat it up, shift right through it. Now what happened? They flipped the book right here. That's your next swing point below the catch-up. And this is your next point that has to break to get confirmation. And they do just that. They close below it, retest higher, close below it, retest higher. The anticipation is that you'll probably end up like that. And then maybe go into sideways consolidation because the time of day. Does that make sense? All right, let's look some more of this opposite way. Okay, pop quiz. What's the first thing you notice about this that's unusual out of all the stuff I showed you? Okay, the black stripes. The answer was the black stripes. Look, right there, right there, right there, right there. Okay, what's significant about that? Anybody know? Look at the times. News release, news release, news release, or changeover, news release. Very interesting, Steve. This was a heavy news day, Reds, and they pulled the book. Pull liquidity out of the book. Why? Because they ain't dealing in that shit. They don't want to deal in that shit. They want to wait for you to make a mistake and then grab it up. Black in the book is absence of money. Notice how they lift theirs in the news. Well, they put it back because they'll take your suckers, traders' money right after the news release. Within seconds, they'll start putting it back and absorbing that shit up. Look at the thickness in the book right after the news. Chop, you don't have a direction yet. How do you get a direction? Well, you have some significant things. There's your 50 EMA. If you want to fade the news a few minutes after, there's the perfect micro M fade off of this high level and the 50 EMA. Okay, when could you take that? If you don't take the exact M right there, you take the close below and pull back into apex, or this would be the nadir, and you sell it right there. There's your flip. Confirmation. What happened? After the news, liquidity was put back into the book. The dealer broke below all the previous low swings right after the news, and then he tested back into it for short for the rest of the day. And it's a decent run. Right? After this news, same type of thing happened. He shifted below, never got back above. He tested the EMA 3 times and then dropped. So you'll notice on the changeovers and the news releases, they pull it clean. They wipe the book. They don't want to deal with it. They don't want to deal with stupid traders. They let them deal with themselves, and then they just, I guess what? To the victors go the spoils. They just collect the money up. All right, typical chart. Something you might see every single day. Nice run. But I want you to notice how prominent the V patterns are. Notice that? Okay, this is typical. Here's your Asian range. All right, coming out. You got stop hunt high, single leg A-frame. Where are you liking this? You got to wait for this to get below here because you don't get a second leg M. When this gets below here, you're looking for somewhere to retest into it. Okay, right off the top of my head, you can use top of this, top of that, get some idea where it might go. Come over here. I like this. I like this, right? I like this more because the 50 EMA is in the box. 50 EMA is in the box. You got a pretty good chance that's going to be the level. You get a nice clean V bounce off of here, which means they put thickness in the book on the 200 and they put thickness in the book on the 50. So what happens? V pattern clean comes right back. sell right out of here. And there's your secondary move, right? You got this move and this move. Then what happens? Another perfect V, right? There's a reason for it to turn, pulls back. Where am I going to get this? The 50's in the picture. I kind of like it here. I don't really have anything to lean on over here. So this is probably a miss, right? I don't get a little microsecond leg. That's a no trade situation. I would have put a limit order right there or even right between the two. And I would have used maybe this to lean on and I wouldn't have got it. So that's a perfectly clean trade right there. Coming out of the highs, flipping the book clean, getting below this stuff, getting below this stuff. It gives me that perfect measured move. I would have tried to catch something around here and I wouldn't have got it. End of the day in the consolidation. All right, one more I want to show you. Okay. People use these boxes all the time. I don't care for them. Supply, demand, bullshit. You know I hate that stuff. Okay, so here's the perfect W structure from earlier, right? You draw your box here, and it flipped and retested perfect micro. This is the futures contract on the 5-minute. This is exactly how I set it up. Okay, these boxes are late to the party, and this is the only one that gave you an entry. This did not. This did not. They have to be retested, and the shade has to change. But I was able to grab a micro edge right here, and I was way better than everybody else because I know that this is blocked now because of the order book picture I just showed you. Right? Looks like this. Perfect W, retest top of the apex. And then they just keep pushing orange higher. There's the 50 EMA. Keep pushing orange higher. Okay? And then here, look, apex pullback. Apex pullback, but doesn't take out this apex. Apex pullback. Apex pullback into the end of the run. Consolidation. Look at the color in the book. Right? Look at the one-sided color. Look at that color. Pressing price all the way up and then both directions. Make sense? Unidirectional move, bidirectional move. See it? All right. A good place to deal right there. Right? This not yet until this gets above. This absorbs that. And you get a pullback. This absorbs this. And you get a micro pullback of a W. Okay, they throw order in the book. It creates the turn bar. You get the pullback. I don't know what I'd lean on over here. I got to look, but there's nothing. And I would try to refine that entry, think it's something like this, and it doesn't give it to me. And then you get a pullback here, and it just drifts the rest of the day, end of day. Look at the time. All right, good stuff. That's what the regular print looks like, just a drift. All right, so I already gave this away. Pop quiz was to tell me the news releases. And this is all the book at the end of the day squished together, right? News, 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 news. It was a busy news day. You can go look up October 24th last week. For a brief moment in time, the book turns black. You know you're in the wrong spot, man. They pull all the liquidity out of the book. And that's why this guy, right? These people that sold got absorbed at very down here when the price just dropped down there like nothing. And I've showed some videos of that. I'll try to get them going again. All right, I'm going to wrap this up here, man. It's a lot to absorb. So what's your homework? A good exercise would be to go back and draw where the turn bars are, right? And understand the liquidity stripes in the book, order blocking, and then try to refine an entry. Try to find a spot where you might want to get in on one of these micro entries. So you might look like marking up. Let's see. Let me erase this all the stuff. And let me just grab the pen back. Okay. So maybe you might want to say, okay, this is my anchor high of the day. Here's a line of liquidity. Breaks below. I'm looking for a micro M on the 50 EMA. Maybe you want to say that's where I would have got in and go back and draw these V's. Then you get a deep pullback. So, okay, I refine this out to here. I got a second shot at it. And it gives me 3 spikes to the high. Could have got in here on a limit order, right? Here's where the book flips. I want to refine the entry off of this piece right here. If it's a pin, redraw the box into there, sell limit order right there, front of the box, stop right here. And there's another V pattern. There's a deeper V pattern. You do that, right? Sell this leg, sell this leg. All right, just some of my exercise ideas. That's all. Just work through it. Imagine what the book is doing, what the book looks like, right? Stop thinking from the front of the screen. Start thinking from the back of the screen. This is what the dealers are doing, and this is what forms the candles, right? This would be the open and high of a candle. It would push down to here. So what might this candle look like? Have a wick, and would be down to here, pull back and have a wick on this side, and then close right about here, right? So the body would go down, and the body would end up looking like this, shorter, and this would be all wick because this was a rejection push back in. Start imagining how these candles are formed in your mind, thinking from the feed in the back of the screen, and start doing some markups like that. Send them to me. You could take a regular candlestick chart, send me what the order flow might look like in the book, right? If price is moving down, it's on the backside. The heavier volume, right? Now they're getting into heavier volume. Noticing the delta starting to come off, choppy, and the delta's coming off. You do not need the tool to understand this. In fact, the tool will slow you down and waste your time. I've had this since 2014, this tool, and it's driven me crazy. And some of you know the story, how I figured all this crap out is exactly a picture like this. It was squished all together because I was watching it develop and the bubbles were popping and orders were changing and going through the book and these lines weren't visible. And I went to sleep and left it running, and I usually turn my shit off and I go to bed. I don't, because I live in a lightning place. Florida gets lightning all the time. I have all battery backup bullshit, power surge protectors, but still gotten fried in my career. So I shut my stuff off and I just sitting there. It was driving me crazy. I just went to bed and forgot to turn it off. And when I got up, I squished the chart together and saw these patterns. Started realizing there's M's and micro M's and V pattern pullbacks and a downtrend and A patterns going up in an uptrend. Started realizing when I squished it together, looking at the entire day from 2 a.m. to 11 a.m., I realized that there was something going on here. And this is how this all came to me to get the refined entry. All right, guys, appreciate you. Sorry about all the technical stuff. We'll get this stuff sorted out. And I figured out what was wrong with Zoom tonight. The meeting ID is not enough. You guys needed the passcode. So I'll start posting the full invitation in Skype. We'll figure it out, man. Good night. Thanks.